Hey guys, this is Chris Mincola with the Mincola Group over at West USA Realty, and I'm doing our weekly market update. We've got some amazing news, some really exciting things happening, some different stuff. So let me show you here real quick, and we'll jump right in. All right. So one of the big things this week, before I get into the really good news, is a couple of bills getting kicked around that would get rid of the Wall Street investors, which in the Phoenix area makes up about 15 to 20% of what we're looking at as far as total investors in our area. But this is strictly for like your Wall Street investors, your big hedge funds and those sorts of things. So what this bill or these couple of bills want to try and do that are out there from the Democrats is to help make things more affordable is what they're thinking will make things more affordable. I say bring down inflation, bring down rates, make things more affordable, but that's a whole nother story. So, they would have to basically pay an annual fee of about 10 grand per home and couldn't have more than 75 single family homes. And that money would be put into a trust for down payment assistance programs for families. And also, the bill would not allow any new homes to be acquired by these giant hedge funds, and they would have to sell off. Bill would require hedge funds to sell at least 10% of the total number of single family homes they currently own to families over a 10-year period. Now, if you break the numbers down, if we have roughly around, let's say, 100,000 homes being sold in the Phoenix area, this is just for the Phoenix area, over a 10-year period, that's basically another 37,500 homes coming into the market that would create more inventory. It's just the question is, could we absorb that for extra 40%? And I would say we certainly could with the growth happening here and the jobs coming here and everything, if rates stay low. Okay. The affordability factor of home prices continuing to go up and, a higher rate problem that could cause problems. But we're going to talk about rates in just a minute. So I think overall, it may be a great win-win, possibly, but I just rather not have the government too in-depthly involved in some of this stuff. But most of what is, if you kind of break it down again into what's happening here, bottom line, as this article puts it, if you want to blame someone as far as, buying all the homes, most of it's being done by those people who are buying, in general, overall, say 1 to 9 homes as investors per year. And, it says here at the end that, the millennials, which make up a very high portion of the population growth happening for about 17-year period for first-time home buyers, if you look at the numbers, which I've done in other videos. But, without getting too far into the weeds, buying homes start, in 2013 with the largest percent of home buyers until mortgage rates rose until 2021. Since then, Gen Xers and baby boomers have once again come out on top, according to National Association of Realtors. Either way, it's not Wall Street, but that isn't a sexy talking point in the class fair award. So baby boomers, one other quick stat on that, 58 to 67, the number making all cash purchases in 2023 is up 32% from 22% in 2022, according to National Association of Realtors. The jump is even more pronounced for old boomers aged 68 to 76, with 51% buying a home without mortgage, up from 32%. So those people who, had that equity, they probably at that age were downsizing, made all cash purchases, or maybe they were moving from a state where homes cost more, like from California to Arizona and so on. So that's kind of that breakdown there. Now, here's the fun stuff, the really fun stuff. Okay. So anyway, I'm not too concerned. I mean, certainly something to keep an eye on. I think having more inventory would be a good thing because, ever since the last crash, home builders haven't been doing, as we talked about many times, haven't been doing the overbuilding like they did before. And across the country, during the crash, we had like what 3.8 million. But we have, right now around 1.4-ish million homes being built. Maybe about half of those are, actually, still on their way for being actually served up. And maybe the other half are actually under contract. So that doesn't leave a lot that are actually new inventory that isn't under contract yet. So uh, that is also part of the issue that's kind of clogging up the gears because with these higher rates overall, even though we've got good news, people are like, look, I'm not gonna move unless I find exactly what I want. And in a lot of cases, especially first-time home buyers or people with not a ton of equity to work with, they're not going to want to put a lot of money into a property and fix it up and all that sort of thing, or make it what they would really want it to be, and so on. So those are just some food for thought there. But mortgage rates have dropped below 7%. Here's how to get the best rate. It goes into applying. I'll do this a little bit more in detail in another video. Obviously, you want to have good credit. You need to have at least, yeah, you can do it 580, but you want to have at least 620 credit score higher, obviously higher than that. Wonderful. You got all kinds of 1% down, 3% down, down payment, total down payment assistance available. As rates drop, we may see more of that coming back for first-time home buyers. But with these, higher rates, you don't see as much down payment assistance just because those programs, usually have a higher rate, more fees and all that. So our overall Cromford report index right now is from 90 to 110. Again, is your balance range. We are at 104, which puts us right there in balance. Our supply is about 34.2 lower than it should be, and our demand is almost right there with the supply at 31.6 below where the demand should be. But again, we're going to start, I guarantee you, we're going to start seeing these numbers tick up. A lot of people are like, well, Chris, a lot of people are putting their home on the market now. Yeah, they're putting their home on the market, but a lot of them are also buying. So that cancels that out. So remember, new supply is going to have to come from new inventory. Those are new homes. So we may see if we should see consistency in this Fed rate drop, mortgage rate drop, and all that over the next 12 to 24 months and beyond, from what all the forecasts are saying right now. As far as our supply goes, we're at 149. If we break down the numbers really quick, 67 days closed on market, 4.4 months supply. Again, that's right in that balance range, guys. Anything over 4 is considered a balanced market, from 4 to 6. Okay, so right now we're in a balanced market, but we're also in a slower time of year. But we're also starting to see an uptick in people going out and get home loan pre-approvals or running credit applications. And we're starting to actually see this time of year a little bit of an uptick, not much, but a little bit of an uptick in homes coming on the market, which is great. So 22.75% absorption rate, a little less than what we'd normally want to see, but we're actually up from last week. So that's great news. The active homes is down a little bit, but the homes going under contract are actually up. People ask a lot about, oh, what about, aren't there a lot of properties going, under contract right now? I'm sorry, not going under contract, but foreclosure right now, Chris, but people, going on hard times and everything. And that would make sense to, maybe people who aren't in this every day. But the answer to our market anyway, and really across the country, is no. We've seen a slight uptick, but when you go from no foreclosures during the pandemic when they didn't allow them, okay, which again, you could see down the road if there was ever a housing issue, we probably would see that again. So when people ask me about a housing crash, that's another safeguard in there. But with inventory so low, you just cannot have a housing crash with inventory as low as we have it right now across the country and in Phoenix. Um, so, and now with rates dropping, this is great news. So we we have all this good news. 52 almost 53% of homes are under $500,000 right now. Okay, so that's just a quick breakdown. I don't want to spend too much time on that, but list average list price is 782,000, 574,000 and some change is the average sales price. That's definitely up, and the average list the sales price ratio is 97.25. Okay, this time of year, we're seeing a lot of people get maybe a little bit better deal. Usually we like to see that number closer to 98% or so. So anyway, that's pretty darn close for this time of year. That's pretty normal. People getting those deals right now. Actually, whoops, I actually had that wrong. Let me see if that updates. Okay. Yeah, we're actually right now 15,605. Okay. Those are homes for sale, all property types, homes for sale in the Maricopa County regional harmless MLS. So right now, let's just take a quick look at this. The rates, let me look, I got this kind of backwards. The rate right now for FHA 6.13. So first time home buyer just a few weeks ago was going to be paying 8%. Okay. Now 6.13%. Those are huge declines from where we were. And then the 30-year, let's see, we are at, let me just pull this right back up. Yeah, right now we're at 6.2. We ended the day at 6.2 or I'm sorry, 6.62. So down another 20 basis points. So that's all good news. Now, just wanted to show this really quick. I just had this kind of pre-prepped. So first time home buyer comes in where we were at 8% at 400,000, which is kind of our new home entry point in the city. Let's say you're in like Phoenix, Tulsa, and Avondale area, Goodyear, if you're going to be Chandler, Gilbert, Scottsdale, obviously those are going to be more expensive parts of Phoenix, but 400 is about the entry point if you want to get into a brand new home, for a 3-bed, 2-bath, let's say 1,600 square feet, something like this. Okay, here's one in Tulsa I just picked out, 396,480. So if we look at the first time home buyer, which is an FHA loan typically, if they're 400,000, here's this with principal and interest. They're going to be looking at 875,000, a little over. I'm sorry. Their monthly payment's going to be 2,432 versus 2,935. Difference in $500, a little over $500 per month in a payment. We always say, when rates drop about 1%, affordability is about a 10% difference-ish, using round numbers. And we went from 8 down to 6.1 for that beginning. And remember, these numbers that I'm showing you on here, these are retail average numbers. So with a wholesale broker, you're going to get a much better deal. You throw in your for the Maricopa County area, you throw in your average monthly rate for your homeowner's insurance right there. If you want to figure a little high, you can go 200 depending on what kind of coverage you have and the area. And then your property taxes. I thought I already had that built out. Anyway, I guess I don't have it there. Anyway, it comes out to be, let's say, 100 something, let's say 200. So if we go back, here, and we added even 400 onto that, that's a big difference from adding a 400 onto this, right? So big difference in numbers. And when we look at rents right now, not that far off, right? So looking down at the individual cities, Chandler is up 2% on the Cromford Market Index. So that's still in a seller's range. It's at 167. Goodyear is up 13%, and that is at 92.1. So that's actually in a buyer's market right now. And the cities that are in a buyer's market are going to be Paradise Valley. Let's see. I'm sorry. Cave Creek, Surprise, Queen Creek, Buckeye, Maricopa. And then the cities, Goodyear, Peoria, Paradise Valley, those are going to be in balanced market. All the other cities, Mesa, Tempe, Avondale, Scottsdale, Phoenix, Glendale, Gilbert, Fountain Hills, Chandler, all in sellers markets. So just gives you a quick idea on what's going on there as far as what kind of market you're in if you're looking to buy or sell right now. But the good news is, again, rates dropped, again, almost, almost two whole percentage points over the last few weeks. That is great news for home buyers. For about every 1% across the country. That means that we're looking at a flood of 5 million additional for every 1%, 5 million. So almost 10 million total buyers can now enter back into the market, guys. That's huge. And we have low inventory. Hello. So what does that tell you about what's coming around the corner? Now, are builders going to be able to keep up with that? They're going to try without going crazy over like they did during the crash and get into that scenario again. But we are, again, way off from hitting any crash numbers. We're heading in the right direction for mortgage rates. 2024 is going to be a boom year. Again, like I said, been saying, I would not be surprised if Phoenix saw 10 to 15% equity gains. Even in a mild year, we'll see probably around 6 to 8. But I'm saying 10, 15% equity gains in the Phoenix area because there is so much pent up demand out there. So many people, whether they're first time home buyers, people that already own homes that want to make a move. There's a lot of investors still working out there. I see all the investors come through, a lot of wholesalers, a lot of people coming through, buying properties, flipping them. There's a lot of activity going on already. And this is just, the Fed has basically said they're probably looking at around 3 Fed rate, reductions next year. They didn't say exactly how much, but even though it's not a direct correlation with the mortgage rates, we already see just from them saying something positive finally, okay, a little late to the party again, but even though they have said that, what's already happened with the rates. Look, I mean, it's just incredible what's happened with the rates. I mean, just literally a few days ago, we were like, in the mid 7s, okay, kind of fluctuating between the mid to high 7s. We were all the way up to 8 when the treasuries were up at 5, and we've got that huge spread. So hopefully we'll start seeing that spread getting close to where it should be at like 2 difference, wherever that 10-year treasury is. We should see, about a 2 spread there. So guys, I think we're starting to see some good things happening with all this, and the feds have finally caught up with one of the biggest lagging factors, which was shelter costs and with rents, which, there is a lag there, but they need to stop looking at a 10 or a 12-month average versus the now. What's happening with those shelter costs now. That's how they figure it, by rents since like the 1970s. So anyway, guys, that's all I got for you right now. If you have any questions at all, I'd be happy to talk more about what's going on in your zip code or your subdivision, your area a little bit more. Now would be a great time to think about getting your property on the market. As rates drop, obviously demand is going to go up. And we always see at the beginning of the year, the searches start going up, in January. By first, second week of February, our pendings start going up and so on. Okay. Right straight through spring and early summer. So guys, reach out anytime with questions, and we'll see you next time. Okay.